I've talked about this for months, that basically when you go, the key trend to focus on all the markets right now are the rally off the 2009 lows. And so when you look at that, you know, we bottomed down here right around 1,000. You can see the fair value area right in here around 4,500. These things tend to be symmetric. They trade in a series of normal distributions of bell-shaped curves, hence the name of our company. So basically 3,500 points here, 3,500 to the upside.
Right.
You know, 7,700, 8,000. Nasdaq is done. I mean, this was very easy to predict. I talked about this months ago. And so one of the key drivers of the whole rally is you could basically take it out of the equation.
So if we were to extend this chart, because it's supposed to be a bell curve, so it's supposed to be like this, does that mean 3,500 down from the heights of the Nasdaq that we saw just this year?
The first place I'd look at is here. We've got fair value coming in about 4,500. The top at around 8,000. You use round numbers. The first place I would look for some support is probably right here in the middle, maybe around 6,000 or so. But the point is, this was one of the key drivers of the whole rally, and it has basically been broken now for months.
Is that your call, though, that we go down 600 points? Or so
I think at least. At least. Yeah. I mean, the larger narrative here is that the whole March 2009 rally is rolling over. So we're not just talking about, you know, a 1 or 2 month thing here. Understand that the March 2009 rally is almost 10 years old. If we correct, the correction is going to be at least 25% to a third. So you're talking about 2.5 or maybe 3.5 years of flat to down equity market performance. This is what's going on now is very consequential.
Are you a pessimistic kind of guy?
No.
Okay,
I'm a
because people are
realist.
watching this and they're thinking this is really a pessimistic forecast.
No. Look, I was on here in February, April, May, and I talked about the Nasdaq 100 basically being done. I talked about the larger narrative of the March 2009 rally rolling over, and this is all playing out now. The one thing that's kind of holding everything together is the S&P, and so if we can go to that.
If we can advance here to the S&P, what are you looking at in the S&P 500, though, as we get the chart up?
The S&P, Melissa, is the most bullish of all the indices. In other words, this is a very U.S.-centric led rally. So Nasdaq 100, Nasdaq comp, broken. Dow has basically hit its target off the March 2009 lows. The one thing that's holding everything together is the S&P 500. It still looks overall bullish, and that's important because this is the key index that all the big institutions focus on.
So this doesn't look so bad to you?
Doesn't look so bad. In the last block, Steve Grasso talked about 2,600 here. I agree with him.
Through that.
Yeah, I agree with him on that. But my assessment of what would happen if you start to sit below 2,600, not for a day or two, but for a couple of weeks, I think it would be much more dramatic.
So a couple of weeks at these levels, and the downside is more than the February lows, which was 25.32. It'd be lower than that.
Yeah, I mean, Melissa, what you're talking about is, again, Nasdaq 100, Nasdaq comp, broken, done. Dow off the 2009 lows, done. This is the one thing holding the whole market together. This breaks, then you're talking about the whole March 2009 rally being over. And so what's the consequence of that? It's almost 10 years old. A typical correction would be 25% to a third. So you're talking about, if you break this level, you're talking about 2.5 to 3.5 years of flat to down equity market performance. It's not just about going down another 100 points. It's much more significant.
So we're really watching. We're really watching. I mean, we've got to get back above.
Yeah, and time is against you. You can't just sit at this major support. So, you know, again, I'd like to see, on the bearish side, you sit below this for a couple of weeks, then you have to start to play some real defense.
Sector-wise, in terms of the sectors you're watching for the S&P 500's health, we talked about tech. How about financials? Financials are already off 20%.
Yeah. I mean, the banks are broken, too. I mean,
forget about those.
Forget about those. If you want to hide out, consumer staples. I've talked about, you know, the IBB. I mean, relatively speaking, biotech looks okay. But this is not, again, this is not a trivial thing right here. Now, you're talking about the whole March 2009 rally rolling. And you got to start to look to play some real defense, cash, the defensives, et cetera.